What's going on? Welcome to Blockchain Tech and Finance News with me, your host, Ken. If you're on the YouTube side, subscribe, turn on bell notifications. I have a slew of news that's going to be going from here on forth from the days out into the new videos that are a bit older news, but still relevant, and the industry all around on what's going on, relatively speaking. So Blockchain Tech and Finance, smash the subscribe button, live every day, weekday at best, but it can be that way. Search Kinsart on OpenSea and Foundation if you're into NFT artwork. I create NFT artwork. Follow me on TikTok, KentoshiGG. Follow me on Instagram, KentoshiGG, and follow on Twitch, KentoshiGG, for extra gaming content and social creation content over there. You can throw your chats up in there, and I will go ahead and read through chats towards the end of the stream. Have them featured up here on the sidebar. Otherwise, let's go right on into the market watch and the news. We have the DGIF. Oh, we're on the futures. Let's go to the US. Start with the US. I don't want to go to the US news market part. We just want to see the overall markets. What's going on in the overall markets? We've got the Dow up 0.45%. S&P 500. Oh, sorry, that's the cryptos. Sorry, we have the Dow up 152.97 points. The S&P 500 down 1.14. Nasdaq down 58.96. The VIX up 1.95. Gold is up 4.30, and oil is down 2.14. And Europe markets, the FTSE 100 is down 25.86. The DAX is down 128.25 points. CAC 40 is down 59.83. FTSE MIB is down 233.97. IBEX 35 is down 74.8. And the Stock 600 is down 3.72. In the Asia markets, we have the Asia Dow down 20.71 points. The Nikkei 225 down 120.20 points. Hang Seng down 275.64 points. Shanghai down 23.14. The Sensex is up 211.16, and Singapore is down 4.49. In the FX, we have the euro. So for the Forex, we got the euro up 0.0069. The yen is down 0.98. The pound is down 0.0006. Australia dollar is down 0.0084. DXY index is down 0.33. WSJ IDX is down 0.26. In the rates market, we have the US 10-year down 0.006. Germany 10-year up 0.02. Italy 10-year up 0.07. Spain 10-year up 0.03. UK 10-year is down 0.005. Japan 10-year down 0.002. In the futures, we have the GGIF down 0.51%, down 0.51%. Oh, sorry, I was like, I don't know why I thought it was in the crypto, but yeah, Dow is up 0.45%. S&P 500 is down 0.03%. Nasdaq is down 0.52%, and the VIX is up 0.859%, and gold is up 0.22%, and oil is down 2.71%. Yeah, so I wasn't reading the percentage; I was just reading the points across the board. But you get it; the points are there. Futures down 0.51%. S&P 500 is down 0.68%. Nasdaq futures is down 0.67%. Gold is up 0.2%, and silver is down up 0.09%, and crude oil is down 2.69%. In the cryptocurrency markets, we have Bitcoin $16,222 per BTC is down 2.10%. Ethereum and USD is $1,172.95 per ETH, down 3.56%. XRP is down 9.98%. Bitcoin Cash down 4.26%. Litecoin USD down 4.18%. Monero USD down 1.78%. Let's go into the first piece of news I'm going to read through here is from CoinDesk. Basically, crypto wallets see mysterious late night outflows totaling more than 380 million from the FTX. This is about a hack in the midst of the collapse as well. So I want to swing back through and cover this. In the business sector, this is what's been occurring lately in the markets. So every day, I'll probably be doing about 2 videos today, actually, 2 to 3 at most, but 2 at base and probably 2 at base tomorrow as well. And moving forward for some catch-up news here, as well as the current news. So FTX has been hacked. Crypto disaster worsens as the exchange sees mysterious outflows exceeding $600 million. FTX officials appear to confirm rumors of a hack on Telegram, instructing users to delete FTX apps and avoid its website. This is from Cheyenne Ligon, Sam Reynolds, Sam Kessler, Nicholas Day, Riley Decker from CoinDesk, not Cointelegraph. The collapse of FTX already is one of the most spectacular disasters in financial history, worsened as hundreds of millions of dollars were drained from the cryptocurrency exchange hours after it filed for bankruptcy. More than $600 million was siphoned from FTX's crypto wallets late Friday, soon after FTX stated in its official Telegram channel that it had been compromised, instructing users not to install any new upgrades and to delete all FTX apps. FTX has been hacked. FTX apps are malware. Delete them. Chat is open. Don't go on FTX site as it might download Trojans. Wrote an account administrator in the FTX support Telegram chat. The message was pinned by FTX General Counsel Ryan Miller. Hours later, Miller disclosed in a tweet that FTX US and FTX.com had been moving all their digital assets to cold storage because of the Friday bankruptcy process was expedited this evening to mitigate damage upon observing unauthorized transactions, he said, following the Chapter 11 bankruptcy files. So here's the tweet right there. Yep. I'm not going to open that. Many FTX wallet holders reported zero balances in their FTX.com and FTX US wallets. FTX's API appeared to be down, which could account for this. According to on-chain data, various Ethereum tokens as well as Solana and Binance Smart Chain tokens exited FTX's official wallets and moved to decentralized exchanges like 1inch. Both FTX and FTX US appear to be affected. Transfers occurred on the same day that the firm filed for Chapter 11 bankruptcy protection in the U.S. after apparently losing or misappropriating billions of dollars in users' funds. Suspicions, which are conjecture at this point, circulated online about whether, rather than an outside attack, someone inside the company might have been responsible. On Twitter, members of the cryptocurrency community quickly began to speculate that the outflows could have been coordinated by a member of Bankman-Fried's inner circle, pointing out that the simultaneously and sophisticated hacks of FTX and FTX US are indicative of a potential inside job. Twitter sleuth XBT tweeted Friday night that multiple former FTX employees confirmed to me that they do not recognize these transfers. Around midnight Eastern Time, FTX's login portal was unavailable, though the site was still online, giving users a 503 error when they attempted to log in. A 503 error happens when the server is unavailable, commonly because it's down for maintenance or unavailable for access. So that's all we have there. To me, it sounds like, sounds like the Among Us sus. Something sounds sus there. But anyways, let's keep moving on. It's from Cointelegraph. Tether blacklist $31.4 million USDT following FTX's alleged hack. Musk reacts. Billionaire entrepreneur Elon Musk, who recently purchased in hopes of unleashing the platform's full potential, acknowledged Twitter's contribution in tracking down the FTX development in real time. This is from writer Arijit Sakar for Cointelegraph. On the night of November 11th, several wallet addresses linked to FTX were found transferring millions of dollars worth of cryptocurrencies without an official notice, sparking speculations ranging from the commencement of FTX's bankruptcy proceedings to the involvement of hackers. Within hours, FTX confirmed on Telegram that the funds transfers were part of an ongoing hack. Following FTX confirmation on Telegram about the hack, so we already basically read that, Tether proactively blacklisted $31.4 million worth of Tether tokens linked to the transactions, as pointed out by blockchain investigator Zach BT. So basically, they blacklisted via their contract. You blacklisted the wallets. You can't transact that USDT in any regards. Is stuck. The blacklisted USDT tokens were made up of 30.9 million USDT on Avalanche and $27.5 million worth of USDT on Solana. Billionaire entrepreneur Elon Musk, who recently purchased Twitter in hopes of unleashing the platform's full potential, acknowledged Twitter's contribution in tracking down the FTX development real time. So this is his contribution. Man F's a million people at once. That's contribution. By blacklisting alleged stolen USDT token, Tether disarms hackers from siphoning the assets to another account or exchange them for other cryptocurrencies. As part of the remediation, Tether can burn the blacklisted USDT and ratio equal amounts of the asset to the original owner. However, the hacker also stole numerous other crypto assets, including Ether, Chainlink, and Pax Dollar USDP, which is yet to see intervention from respective ecosystems. Over the past few days, major crypto exchanges, including Binance, OKX, KuCoin, and Crypto.com, committed to sharing their proof of reserve to regain investor confidence. Yeah, that's a good thing. I like that. Taking the lead in this drive, Bitfinex Chief Technology Officer Paolo Ardoino shared 135 cold and hot wallet addresses revealing Bitfinex's proof of its reserves. While the move was well received by investors, few members of the community pointed out the lack of Bitfinex's liability figures, which makes the data incomplete for review. But yeah, the proof of reserves is definitely a step in the right direction. Most definitely. Let's go on to the next piece of news here from CNBC. So we've got some blockchain news, cryptocurrency news. Crypto peaked in November 21. Investors lost more than $2 trillion since then. This is from writer Ari Levy and Mackenzie Zagalos for CNBC. The key points here is after a year after Bitcoin peaked at more than $68,000, it's down below $18,000. Recently, we're taking more dives here right now. The industry has been hit with macroeconomic challenges, market forces, and scandals. What was dubbed the crypto winter earlier this year has turned disastrous this week with the spectacular collapse of FTX. Yeah, I mean, that's what a crypto winter is. It's shaking all the things that don't belong. A year ago this week, investors were describing Bitcoin as the future of money and Ethereum as the world's most important developer tool. Non-fungible tokens were exploding. Coinbase was trading at a record, and NBA's Miami Heat was just into its full season on the newly renamed FTX Arena. As it turns out, that was peak crypto. In the 12 months since Bitcoin topped out at over 68,000, the two largest digital currencies have lost 3/4 of their value, collapsing alongside the riskiest tech stocks. The industry, once valued at roughly $2 trillion, now sits at around $900 billion. Rather than acting as a hedge against inflation, which is near a 40-year high, Bitcoin has proven to be another speculative asset that bubbles up when the evangelists are behind it and plunges when enthusiasm melts. Investors get scared. In the $135 million that FTX spent last year for a 19-year deal with the Heat, the crypto exchange and the naming rights is poised to land in the history books alongside another brand that has had its logo on a sports facility, so being Enron. In the blink this week, FTX sank from $32 billion valuation all the way to bankruptcy as liquidity dried up. Customers demanded withdrawals, and rival exchange Binance ripped up its non-binding agreement by the company. FTX founder Sam Bankman-Fried admitted on Thursday that he effed up. On Friday, he stepped down as CEO. Looking back now, the excitement and prices of assets were clearly getting ahead of themselves and trading far beyond any fundamental value, said Katie Talati, director of research at Arca, an investment firm focused on digital assets. As the downturn was so fast and violent, many have proclaimed that digital assets are dead. Whether crypto is forever doomed or will eventually rebound, as Talati expects, the 2022 bloodbath exposed the industry's many flaws and served as a reminder to investors and the public why financial regulation exists. Bankruptcies have come fast and furious since mid-year, leaving clients with crypto accounts unable to access their funds and in some cases scrapping to retrieve pennies on the dollar. If this was indeed the future of finance, it's looking rather bleak. Crypto was supposed to bring transparent actions in the blockchain could all be tracked. We didn't need centralized institutions, banks, because we had digital ledgers to serve as the single source of truth. The narrative is gone. Speaking for Bitcoiners, we feel like we're trapped in a dysfunctional relationship with crypto, and we want out, said Michael Saylor, executive chairman of MicroStrategy, a technology company that owns 130,000 Bitcoins. The industry needs to grow up, and the regulators are coming into this space. The future of the industry is registered in digital assets traded on regulated exchange, where everyone has the investor protections they need. Let's see. Taylor was speaking on CNBC's Squawk on the Street. At FTX demise roiled the crypto market. Bitcoin sank to a 2-year low this week before bouncing back on Thursday. Ethereum also tanked, and Solana, another popular coin used by developers touted by Bankman-Fried, fell by more than half. And I actually heard recently that the Solana Some sort of might have been like really heavily involved with FTX and FTX holding Solana and kind of like floating it up. I don't know. Equities tied to crypto suffered too. Crypto exchange Coinbase tumbled 20% over 2 days, while Robinhood, the trading app that counts Bankman-Fried as one of the biggest investors, fell by 30% during the same period. There was already plenty of pain to go around. Last week, Coinbase reported a revenue plunge of more than 50% in the third quarter from a year earlier in a loss of $545 million. In June, the crypto exchange slashed 18% of its workforce. We're actively updating and evaluating our scenario plans and prepared to reduce operating expenses further if market conditions worsen. Alicia Haas, Coinbase's finance chief, said on November 3rd earnings call. How it started, the downdraft started in late 2021. That's when inflation rates started to spike and sparked concern that the Federal Reserve would begin hiking borrowing costs when the calendar turned. Bitcoin tumbled 19% in December as investors rotated into assets deemed safer in a tumultuous economy. The sell continued in January. So we already know this, yeah. Recently with the plummeting of Bitcoin and Ethereum, we're seeing it even more so today. You can see the markets down on macroeconomics. And it's during crypto winters that the best entrepreneurs build the better companies. Marcus wrote in a January 24th tweet, "This is the time to begin to focus on solving real problems versus pumping tokens." The crypto winter, it didn't actually hit for a few months. I don't even think we're fully into the crypto winter. I think it's going to be like a long 2 to 3 year crypto winter. A stablecoin is a type of digital currency designed to maintain a one-to-one peg with the US dollar, acting as a sort of bank account for the crypto economy and offering a sound store of value as opposed to the US. So the USDT is a catalyst as opposed to the volatility experienced in Bitcoin and other digital currencies. Where in Terra USD or UST, its sister token called Luna dove below the $1 mark. A different kind of panic set in. The peg had been broken. Confidence evaporated. More than $40 billion in wealth was wiped out in Luna's collapse. Suddenly, it was as if nothing in crypto was safe. The leading cryptocurrencies cratered, with Bitcoin dropping 16% in a single week, putting it down more than half from its peak 6 months earlier, and the macro front inflation had shown no sign of easing, and the central bank remained committed to raising rates as much as would be required to slow the increase to consumer prices. In June, the bottom fell out. Lending platform Celsius paused withdrawals because of extreme market conditions. Binance also halted withdrawals, while crypto lender BlockFi slashed 20% of its workforce after more than quintupling since the end of 2020. Permanent cryptocurrency hedge fund 3 Arrows Capital, or 3AC, defaulted on a loan worth more than $670 million. And FTX signed a deal giving the option to buy BlockFi at a fraction of the company's last private valuation. Bitcoin has its worst month in record June, losing roughly 38% of its value after it plumped. Yeah, it plumped down more than 40%. Then came the bankruptcy. Singapore-based 3AC filed a bankruptcy just months after closing. It had $10 billion in assets. The firm's risky strategy involved borrowing money from across the industry and then returning around and investing the capital in other non-nascent crypto projects. After 3AC fell, crypto brokerage Voyager Digital wasn't far behind. That's because 3AC's massive default was on a loan from Voyager. We strongly believe in the future of the industry, but the prolonged volatility in the crypto markets and the default of 3 Arrows Capital require us to make the decisive decision, Voyager CEO Steven Ehrlich said at the time. Next was Celsius, which filed Chapter 11 protection in mid-July. Let's see. Meanwhile, Bankman-Fried, obviously, with the FTX collapse. SBF, as we know, was dubbed some of the JP Morgan of crypto. He told CNBC's Rooney in September that the company had in the neighborhood of $1 billion to spend in bailouts if the right opportunities emerge to keep key players afloat. It's not going to be good for anyone long term if we have real pain, if we have real blowouts, and it's not fair to customers, and it's not going to be good for regulation. It's not going to be good for anything, Bankman-Fried said. From a longer term perspective, that's what was important for the ecosystem. It's what was important. I'm not going to continue reading this guy's words, actually, to be honest. A lot of people are saying he just basically stole everyone's money. Something about taking billions of dollars in loans and out from his own company and things like that. how it's going. So Binance announced a non-binding agreement to acquire FTX on Tuesday, which obviously they stopped that. That's not happening. Venture firm Sequoia Capital first backed FTX in 2021, had an $18 billion valuation, said it was marking its $213 million investment in FTX down to zero. Multicoin Capital, a crypto investment firm, told limited partners on Tuesday that while it was able to retrieve about 1/4 of its assets from FTX, the funds still stranded there represent 15.6% of the fund's assets, and there's no guarantee it will all be recouped. Additionally, Multicoin said it's taking a hit because its largest position is in Solana, which was tumbling in value because it is generally considered to be within SBF's sphere of influence. The firm said it's sticking to its thesis and looking for assets that can outperform market beta across market cycles. We're not short-term on momentum traders. We do not operate on short-time horizons, Multicoin said. Although this situation is painful, we are going to remain focused on our strategy. It won't be easy. Brian Gilbert, founder of fintech venture firm Launchpad Capital, said the crypto world is facing a crisis of confidence after FTX's implosion. While it was already a tumultuous year in crypto, Gilbert and Bankman-Fried was a trusted leader who was comfortable representing the industry on Capitol Hill. In a market without a central bank and issuer, an insurer, or any institutional protections, trust is paramount. It's a question of trust. Can trust exist and at all in this industry at this stage of the game? Gilbert said in an interview Thursday, to a large extent, concept of trust is in a bank is as bankrupt as some of these companies. Yeah, some context on insurances is probably best to start stepping into cryptocurrency exchanges and stuff like that. Most definitely. So I'm going to stop reading this article here. Crypto peaked a year ago. Investors have lost more than $2 trillion since, is the header of this article we just read through. Kind of a bit lengthy at there. Let's keep going into Cointelegraph. The Climate Change Coalition releases a report on blockchain and emerging technologies at the COP27. So I want to go into some technology. Let's go into the lighter view of things on the technology, actually what blockchain is doing. Cointelegraph is a member of the network of organizations committed to using blockchain technology for climate action. The Climate Change Coalition, CCC, is a network for organizations dedicated to leveraging blockchain technology for effective climate action that includes Cointelegraph as a member, delivering its stock take report on November 11th at the 27th United Nations Climate Change Conference, or COP27, in Sharm El Sheikh, Egypt. Founded 5 years ago, the coalition has been working on initiatives related to consumption accounting systems and greenhouse gas emissions accounting. Tom Baumann, chair and founder of the Climate Change Coalition, stated, in quote, during those years, the coalition has grown from 12 founding organizations to over 360 organizations on 69 countries. The coalition was founded on the ethos of blockchain and emerging technologies as an open distributed network where members self-organize into member-driven initiatives. The coalition's mission is to resolve issues and challenges needed to advance transformational digital climate innovations by creating resources to support a shared data and digital infrastructure, supporting network and capacity building and partnering between digital and climate communities. Speaking at the panel, Cointelegraph editor-in-chief Christina Lucrezia Corner commented, in quote, education is key here. The media responsibility is incredibly high. We considered it our biggest mission to talk not only about what is intrinsic to the blockchain industry, but what's going on beyond. Because it's out of the box that things are uniting us, because this conference is about climate action, and climate is so much more than just climate change. It's about sustainability. It's about our future. Also participating in the panel, Alexei Shadrin, co-founder and CEO of Evercity, a platform for the management, issuance, and monitoring of sustainable finance, highlighted how the coalition's efforts are supporting organizations with use cases of implementing blockchain technology, as well as guidance to the new projects that are rapidly emerging right now in the markets. We want to make sure that these projects are not only innovative and cool, but also aligned with the core UN values and standards that currently exist there and were developed by many experts within the UN process and beyond. Even though digital assets have been criticized for their high energy consumption, such an accusation is inaccurate. There's a distinction between cryptocurrencies and the underlying blockchain platforms that can energy efficient and support climate initiatives that can be energy efficient. All right, Climate Change Coalition releases a report on blockchain and emerging technologies at the COP27. This is from Ana Paula Pereira. Writer for Cointelegraph. Writer reporter for Cointelegraph. Let's keep going into the Yahoo Finance side. Into some finance news. All right, they will come to at 69K peak. Bitcoin has plummeted more than 70%. Here's why Warren Buffett has hated cryptocurrency all along. This is from Ethan Rotberg for Yahoo Finance. This is in the MoneyWise section. And all of these articles will be on the recap on the YouTube side, so you can read through at your own due diligence and do further research. It's been a rough year for Bitcoin and its backers, and even back in 2018, the Oracle of Omaha predicted that it and other cryptocurrencies were headed for trouble. They will come to a very bad ending, Warren Buffett told CNBC Time after hitting an all-time peak of around 69,000 per unit in November 10th, 2021. The world's leading digital currency has since erased roughly 76% of its value, sitting at just under 16,000 as of 4:30 on Wednesday, a few weeks ago, 2 weeks ago. Holders who once thought they'd made it of a lifetime are now, Bitcoin is still flat right now. It's still flat, a little above 16K. So yeah, the opportunity of a lifetime are now sighing relief. Meanwhile, those who bought in at the peak are trying not to think about their losses. What would world's most famous investors say to these who might be thinking of firing up their investment apps and buying Bitcoin at a bargain price? If you owned all the Bitcoin in the world and you offered it to me for $25, I wouldn't take it, Warren Buffett told CNBC earlier this year. It has no unique value at all. The billionaire investor doesn't like Bitcoin because he considers it an unproductive asset. Warren Buffett has a well-known preference for stocks corporations whose value and cash flow come from producing things, but cryptocurrencies don't have real value. Buffett said in a CNBC interview in 2020. Yes, he said they don't produce. Oh yeah, here we go. They don't produce. They don't reproduce. They can't mail you a check. They can't do anything. And what you hope is that somebody else comes along and pays you more money for them later, but then that person's got the problem. Though Bitcoin is intended to provide real value as a payment system, that use is still pretty limited. As Buffett sees it, Bitcoin's value comes from the optimism that someone else will be paying more for it in the future than you're paying for it today. He doesn't think cryptocurrency counts as money. Buffett has made his share of extremely cutting remarks about Bitcoin and cryptocurrency over the years. I don't have any Bitcoin. I don't own any cryptocurrency. I never will, he told CNBC back in 2020. As a tradable asset, Bitcoin boomed, but does it meet the three criteria of money? According to the most common definition, money is supposed to be a means of exchange, store of value, in a unit of account, but Buffett calls it a mirage. Does not meet the test of currency, the billionaire said on CNBC in 2014. It is not a durable means of exchange. It is not a store of value. He said that it is very effective of anonymously transmitting money, but a check is a way of transmitting money too, he said. And a check's worth a whole lot more. Our check's worth a whole lot of money just because they can transmit money. He doesn't understand it. Right, that makes sense. Buffett became one of the most successful investors in history by sticking with the stocks he understands. I get in enough troubles with things I think I know something about. Why would in the world should I take a long or short position on something I don't know anything about? But people like to gamble, he told CNBC after a 2018 Berkshire Hathaway annual meeting, which is another problem with non-productive assets. If you don't understand it, you get much more excited than if you understand it. You can have anything you want to imagine if you just look at something and say, that's magic. How does he pick winning stocks? The billionaire investor follows the value of investing strategy, which focuses on buying undervalued stocks of strong companies and hold them for a long time. Simple, right? Berkshire Hathaway looks for companies with a good profit margin and those that produce unique products that can't easily be substituted. As Warren Buffett once said in a letter to his shareholders, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. But Buffett's distaste for crypto stocks doesn't mean you shouldn't buy Bitcoin. Even the billionaire has come around on sectors he previously spoke out against. He notoriously avoided tech stocks even at the height of the dot-com bubble, and now his largest holding is Apple. His company's largest holding is Apple. Yeah. Okay. Yeah, that's a nice little article right here. Has some key points to it, important key points. They will come to a bad ending a year since its 269K peak. Bitcoin has plummeted more than 70%. Here's why Warren Buffett has hated cryptocurrency all along. And my theory is, I don't really know which way Bitcoin's going. But I'm collecting, and if it decides to someday in the coming years go to $100,000, I'll assess the value of what I've collected and what to do at that time. PC Gamer. This man should be put in jail. Bro burns 10. This is from some NFT news now. Going into NFT and NFT artwork and read-throughs. $10 million Frida Kahlo paintings. Mariachi band plays. I had to do something drastic to get attention. They basically said a businessman is under investigation facing possible charges after sketch by artist Frida Kahlo to promote the sale of NFTs based on it. Mark burned the 1944 drawing valued at $10 million at a Miami party in a martini glass. The Kahlo sketch was called Phantasmons Siniestros, or Sinister Ghost, dated from 1944, and was a crayon, pencil, and ink drawing showing a surreal conglomerate of creatures. It was apparently destroyed at a launch party for Frida NFT, which aims to sell 10,000 NFTs off the back of the stunt. The New York Times reported that the project has so far sold 4 NFTs. A video from the event shows Mark surrounded by ludicrous levels of security, removing the picture from its frame before placing it in a martini glass and setting it alight. Most unbelievably, the mariachi band begins playing the popular Mexican song Cielito. Someone in the crowd cheered back. I had to do something drastic to get attention, Mubarak told the New York Times. There's some skepticism about whether even the Web3 crowd would actually pull off such a crass stunt and whether the drawing shown being burned was genuine. Mubarak said he bought the drawing in 2015, insists that the work he burned was authentic. The NFT site includes a certificate of authenticity and provenance for this being the original. Of those who doubt Mubarak really burned it, he says, how do they know I didn't? The Mexican National Institute of Fine Arts and Literature is now investigating whether Mubarak did burn an original Kahlo and thus committed a federal crime. Kahlo's work has been protected under Mexican law since 1984, and artistic monuments and punishment could be decades in prison plus fine equivalent to the work's value. The Frida Kahlo Museum in Coyoacan also put out a statement condemning the act and pointed out it owned the rights of all of Kahlo's work and had not given any permission for an NFT being made. It called the stunt the destruction of the cultural heritage of a country and said it had no ties to the collector and his activities. Gregorio Luke, an expert on Mexican and Latin America art and culture, said, I think this man should be put in jail. The Frida.NFT project tries to angle this act as a global one of global benevolence. This profound act was done for unfortunate and sick children, battered women, and other less fortunate around the world to receive hope. Mubarak's plan was to sell 10,000 NFTs for 3 ETH each, around 3,600, and its current price of raising some $36 million. In theory, I'm a fan of Frida. She endured a tremendous amount of physical, mental, and spiritual pain. Mubarak told the Miami Herald, I'm using that one small painting to create something really good. She would be happy about. I think if I own that painting, I would have just said someone who collects one of these NFTs is going to be randomly drawn to receive this painting, not burn it. That's something I would have done instead. Especially if there's a lot of laws and regulations up here that we're seeing. Of all the NFT trends, this idea of destroying real items in order to confer some mystical legitimacy of a digital token is among the worst. The artist Damien Hirst recently jumped on this idea so pervasive has it become, with a 2021 project called Henny featuring 10,000 artworks where buyers had a year to choose whether to keep the original or have it destroyed and get an NFT of it. 4,581 buyers chose the NFT option. Number 17 in the collection is titled None of This Matters. There was also a stunt in 2021 where the group burned the Banksy painting. There was at least an element of wit for this example, with the Banksy piece titled Morons and depicting an auction room full of people buying art at Christie's. Where this will end up is anyone's guess. Is anyone's guess? Let me see. I just had a note. Yeah, I don't know which way this is going, but I mean, just, there's some smarter rhyme of reason here within NFT projects for what you're doing. Given if you're going to produce an NFT artwork project, given the profile the stunt has attained, it seems almost certain that should he have burned the real thing, the Mexican authorities will look to pursue him for it, while the Kahlo Museum has a long history of seeking legal redress against misuse of her work. People may see it as I destroyed it, said Mubarak, but I didn't. This way, I am bringing it to the world. I am letting everybody see it. I think it does more good for the world and makes a statement rather than just sitting in someone's private collection. I mean, the man owned it, especially if he bought it, but there's laws around it, I guess. We can do with the artwork. Unless you're actually the creator. If you're the creator, you can do whatever you want. This next article is from Yahoo Finance as well. Inflation, and yeah. The realm and world of inflation. Now, inflation data rises. Doubts about whether the Fed will stay the course. And this is the morning brief in Yahoo Finance, or before on Catch Up. This is from Jared Blickray, reporter focused on the markets of Yahoo Finance. Stocks and bonds had an especially bullish reaction to new data out Thursday. This is Catch Up news again. Obviously, the markets are pretty much in turmoil right now. Showing that inflation continues to moderate after reaching a 40-year high over the summer. There were some good weeks in the past few weeks, but yeah, we're definitely in the red now. The Dow, DJIF, NASDAQ, S&P 500, the Russell 2000 each had their best day since the 2020 pandemic lows. The 5 and 10-year Treasury notes saw the biggest one-day drop in yields since then. Fed Chair Ben Bernanke, I don't know, ramped up quantitative easing back in March 29. I think it's Bernanke. I can't. It's so weird. There's like an N right there. Bernanke. I think that's how you pronounce that. Apologies if I butchered your name, but anyways, I'm trying. A casual observer could be forgiven for thinking the Fed has whipped inflation. While the U.S. is far from its 2% inflation goal, inflation eased more than expected last month. The headline consumer price index rose 0.4% in October versus expectations of a 0.6 gain, while the year-over-year measurement ticked down to 7.7% from 7.9%. Taking out food and energy, core inflation also rose in October, but less than expected. My mic's not too high, but turn it down a little bit. Turn my voice up a little bit. So, will this be enough for Fed Chair Jay Powell to change his tune and slow pace of interest rate hikes? Echoes of a Powell pivot could be heard across the Twitterverse as stocks rocketed higher across every sector and industry. Although inflation remains stubbornly high, the better than feared CPI prints inspired some investors to start taking risks again. Optimism through 2022 have fueled outsized market moves such as these. So far, market participants have judged incorrectly, as new lows in the major indices have followed every major rally. Powell, for his part, has pledged to raise interest rates even if it hurts part of the economy. At his last press conference, Powell flat out said he's more concerned with entrenched inflation than he is with the risk of the Fed continuing on its hawkish path, the main danger being a recession. That resolve hasn't stopped investors from hoping that the Fed will stop rate hikes sooner rather than later. Alfonso Picatiello, founder and CEO of the Macro Compass, told Yahoo Finance on Thursday that bonds are pricing in a lower terminal Fed funds rate, or at the rate at which the Fed stops hiking. He also highlighted that bond volatility is dropping like a stone and credit spreads have tightened. These signs all nudge investors to take on more risk, at least in the short term. With this inflation print, Picatiello said investors believe less and less the Fed will stray its course. All right, that's that there. Inflation data rises doubts about whether the Fed will stay the course, reducing Fed rate hikes. Let's go into can we read the BBC today? Let's see some news. The G20, let's go to some global news here. G20 in Bali, trouble in paradise as leaders gather. This is from 12th of November. Starting about an idyllic paradise of palm trees and pineapple sun and serenity that comes in mind when you think of Bali. But this week, the Indonesian island is hosting what could be the most strained edition of the G20, or Group of 20 Nations. The annual summit, which includes 19 advanced emerging economies in the EU, was created after the Asian financial crisis in 1999, and it considers itself something of a superpowers club that manages future crises. At this time, there are plenty on the discussion block: the Russian-Ukraine war brewing and U.S.-China tensions, soaring inflation, the ever-looming threat of a global recession, nuclear threats from North Korea, and perhaps the most alarming of all, rapidly warming Earth. Amid all this, host and Indonesian President Joko Widodo hopes to play chief dealmaker. Can he do it? An era of living dangerously. When we spoke ahead of the G20 meeting, Mr. Widodo seemed sanguine about what has been described as the most diplomatically delicate and stressful G20 ever. U.S. President Joe Biden and China's leader Xi Jinping were set to meet on Monday, and the clash of the world's two largest economies has Mr. Widodo worried. There can be no peace without dialogues, he told me in an exclusive interview at the presidential palace in Jakarta. If President Xi Jinping and President Joe Biden can meet and talk, it would be very good for the world, especially if they are able to come up with an agreement about how to help the world recover. Like many Asian countries, Indonesia has benefited from decades of free trade and multilateralism, and the U.S. has always been Indonesia's most important global strategic partner. But over the last decade, China has consistently ranked as one of its top two foreign investors. That's made navigating the relationship between the two giants tricky, to say the least. An era in which China and the U.S. aren't getting along is far more dangerous than Indonesia and other Asian countries that have been accustomed to. Observers say that the growing tensions between Washington and Beijing increase the risk of conflict in the Indo-Pacific. Meanwhile, there are also fears of possible use of nuclear weapons either in Ukraine or on the Korean Peninsula, where Pyongyang has fired a record number of missiles this year. The use of nuclear weapons for any reason cannot be tolerated, Mr. Widodo, also known as Jokowi, says. The increasing potential for nuclear use is very dangerous for peace and for world stability. So getting people to talk, a key issue for Mr. Jokowi personally has been food security, particularly as the war in Ukraine has been responsible, in his view, for raising prices, something that directly impacts Indonesia's 275 million people. He politely termed Russia's invasion of Ukraine a headache, something that he's been taking up his mind. Securing a steady and consistent resumption of grain exports is one of the reasons why ahead of the meeting, he crisscrossed the globe, meeting with President Vladimir Putin and Volodymyr Zelensky to convince them to come to the meeting. He had hoped they could talk. I think it would be great if the presidents, Vladimir Putin and Volodymyr Zelensky, could sit at the same table to solve the problems that exist, because the problems that we are dealing with now are on all fronts, Mr. Widodo said. Mr. Putin is not coming, Russian diplomats have since said, but Mr. Zelensky could attend virtually. Jokowi's swan song, the G20, is as much Indonesia's coming out party as it is Mr. Widodo's swan song. He is in the final stretch of his presidency, and in 2024, he will have to stand down after 2 terms in power. When I first met him in 2012 as the then Jakarta governor, he was a younger and more idealistic. Branded the first outsider to become president in Indonesia's history, he was elected as a man of the people, a Democrat's Democrat. Since then, he has had to govern a vast archipelago of 17,000 islands, a country that from west to east stretches the distance between London and Baghdad, with hundreds of different languages and ethnicities in between. It's a challenge I've written about before, and over the past few years, I've seen Jokowi, man of the people, transform into Jokowi president, and now a pragmatist. He's been a coalition builder, someone who knows he has to compromise to not just survive, but also thrive. Critics say he is no longer the Democrat he used to be. Human rights groups and environmental campaigners have both said that he has consistently put the economy ahead of democratic interests. Although he remains extremely popular by international standards, his approval ratings have fallen recently, partly because of rising prices. Yes, the country has weathered the current economic slowdown better than others, described by the International Monetary Fund as a good performer among regional economies. It is obvious Mr. Widodo is keen to preserve and grow the economic legacy he is leaving behind for Indonesia. What we would like to see in 2045 is that Indonesia's golden era will be truly realized, he says toward the end of our conversation. By 2030, he expects Indonesia to become the number 7 economy in the world. There's a lofty ambition and one that will resonate with many of his citizens, but it's also one that may be out of his hands. Indonesia's future depends on a stable global economic environment, something Mr. Widodo hopes to come closer to securing at next week's G20 summit. Interesting intake here for this recent G20 in Bali. I got one last piece of news here. I'm going to close out the stream for the day. This is from NBC. All right. Twitter pulls paid verification, some tech here, basically overview tech, and crypto and the sudden absence of the service adds to a series of whiplash product moves. In the 2 weeks Musk has controlled the company. They halted Twitter Blue subscription service after apparently abused the feature. Twitter has suspended signups for its Twitter Blue subscription service after the initial rollout was marred by users who received a paid verification badge and then impersonated celebrities, politicians, and brands. Twitter users first began noticing the change late Thursday night when the Blue subscription option was no longer on the sidebar menu of the app. The sign-up page for Twitter Blue appears to still direct to a page information about the service, but without an option to sign up. It was not immediately clear if or when the service would be restored. The sudden absence of the service, which CEO Elon Musk has touted as an important step as Twitter looks to increase revenue and decrease the prevalence of bots and trolls, adds to a series of whiplash product moves. In the 2 weeks Musk has controlled the company, one sales employee at Twitter said the company decided to pull back the Twitter Blue verification service after a number of accounts began impersonating companies using accounts with paid verification badges, which looked the same as Twitter's original verification badge for notable public figures and brands. Even another Elon Musk venture, electric car maker Tesla, could not be protected by Twitter from an impersonator disparaging the brand. The employee, who asked to remain unnamed, citing fear of retaliation, said an account created in the likeness of the drug company Eli Lilly caused a particularly serious problem on Thursday when it tweeted out, "We are excited to announce insulin is free now." That tweet went viral and remained on the social media platform for at least 2 hours before it was taken down. The real Eli Lilly account later tweeted, "We apologize for those who have been served a misleading message from a faked Eli Lilly account." Eli Lilly's stock price dropped sharply after the fake tweet was posted, as did those of other pharmaceutical companies, including AbbVie, which was also impersonated. Major stock indices were broadly positive Thursday, with the S&P 500 posting its biggest rally in 2 years. International communications obtained by CNBC indicate that Twitter support initially determined that the tweet impersonating Eli Lilly did not constitute a violation of the company's terms of service. An sales employee said they encouraged clients to tweet directly at Elon Musk about their problems. Twitter also reintroduced a newer official badge to some accounts. The company confirmed that news on one of its Twitter accounts. The pullback of Twitter Blue Verified also comes as the company's new leadership is considering how to comply with the oversight from the Federal Trade Commission, according to company-wide emails sent to employees on Thursday night obtained by CNBC. Twitter is currently under a consent decree from the FTC, which forces it to notify the agency about new products and with a written plan, among other things. Some employees have expressed doubt about Musk's willingness to comply with the FTC oversight. Earlier this week, internal communications on a company message board, which were viewed by NBC News, showed that employees were concerned about whether Twitter's new leaders would ask them to do any work that could compromise a violation of consent decree or any other laws and regulations. All right, so that's this. This is all I have for the news today. And we're closing out with Twitter pulls verification after the after impersonators flourish, and some closeout of, I don't know why it says crypto on the edge there. This is not in the crypto. I was just reading through tech overview. Piece of tech news as close as I could get for recent tech in the sector dealing with Twitter, which is a technology app. All right, so this is all I have for the reading today. If you're on the YouTube side, please do subscribe, turn on the bell notifications here to blockchain, tech, and finance news. And let's see, at best, smash the subscribe button. We're live every day, weekday at best. I've been very busy dealing with building Web 2, customer sites, websites. If you are into NFT, you can search Kinzar and OpenSea Foundation. Follow on TikTok, Kentoshi GG. Follow on Instagram, Kentoshi GG. Follow on Twitch, Kentoshi GG, for extra gaming content and social creation content. Right there, you can put your chats in there on the overlay, and I will feature them right here on the side panel. All right, and again, I will be back a little bit later today with some more news to read through some past current news here. Cheers, ciao, peace be with you, stay safe.